If you're in the market to buy a house or in the process of buying a house, but you're overwhelmed and you don't really understand what are you paying for, then this video is for you. My name is Miriam Abdu. I'm a real estate agent with Khalil team in Keller, Williams, Photo Range, and I love making these videos to give you information and educate you about real estate. Buying a house can be an overwhelming process, especially if you don't really have any experience or you don't know how the process goes. So a good place to start is my last two videos. I explain more about the process, how things go, what happens after your offer gets accepted, how to prepare for buying a house. So there's a lot of information on those two videos. So I suggest for you to go watch them. It might answer some of your questions. But in today's video, I'll be talking more about the closing costs. How much exactly will come out of your pocket that has nothing to do with the loan for you to be able to complete the process and buy the property. This is what's called cash to close. So for us to be able to calculate the cash to close, there's a very simple equation. We add the down payment to the closing costs, and then we subtract the adjustments. The amount of down payment you'll put down will depend on what type of loan you're using. So for example, if you're using a conventional loan, the minimum down payment required would be 3%. If you're using a FHA loan, minimum down payment required would be 3.5%. If you're using a VA or a USD loan, minimum down payment required would be 0%. Of course, you can add more towards the down payment, and this would help with the mortgage payment, but this is the minimum down payment required by each type of loan. Then we add the closing costs, which I'll be talking about in a minute. This is the point of the whole video, but I just wanted to take a second to explain what can we find in the adjustments. So among the items that you'll find in the adjustments is the earnest money deposit, or as we call it, the good faith money. This is the deposit that you initially agreed to pay the seller when you made your offer, just in good faith or just to confirm and show your seriousness that you want to buy the property. A couple more items that you can find on the adjustments would be any credits that goes back to you. Among those can be the lender credit, agent credit, seller's credit. So we don't see a lot of those right now in this market, because if you asked the seller to contribute towards your closing costs, your offer might not be as competitive as the other offers. So we're not seeing seller's credit this much in this market, but you can ask the seller to contribute towards the closing costs, and this is where you can find it. So what exactly are the closing costs? We don't realize that the process of you buying a house involves a lot of other individuals and entities. So the closing cost goes towards paying all those individuals and entities that are helping you to complete the process of buying your house. So imagine it this way: you're standing in the middle of a circle, and there's a circle of people around you that are helping you to complete the process. So the closing cost goes towards paying each and every one of those individuals and entities. So you might be thinking, who else will be helping me? It's just my agent, the seller's agent, and the lender. Well, there's a lot of other people. We have you, we have the seller, we have the buyer's agent, we have the seller's agent, we have the lender that will help you qualify and get the loan to purchase your house. We have the insurance agent that will help you get your homeowner's insurance. We have the home warranty. I have them written down so I don't want to forget anything. We have the county, which will help record the deed and say that this house belongs to you right now. We have the appraisal, which is the person that will be judging the value of your house. We have the inspector, which is the person who will make sure everything is fine with the house, everything is up to code, there's no major issues. We have the title company that will make sure that the title is clean, there's no issues on the house. And in some states, actually, we have lawyers. Not necessarily in California, but some states will require a lawyer for the process to be completed. And then we have the escrow company, we have the GC, we have a lot of other individuals and people that are involved in just you buying a property. So again, all those people needs to get paid, and this is where your closing costs goes. So I'm sure your next question would be, will I be able to know exactly how much I will be spending before I complete the process? The answer is yes and no. You will know how much you'll be spending, but you're not going to know exactly how much. And the reason why you're not going to have an exact number is because your lender doesn't really know how much each of those individuals and entities charge for their services. So what happens is they usually have an idea or an estimate. That's why all those services will be itemized on a document that is called the loan estimate that your lender is required to give you 3 days after you open escrow or you're under contract. So during escrow, which usually takes anywhere between 30 to 45 days, your lender will start receiving invoices from those individuals and entities for how much exactly they will be charging. So he'll know exactly what are the fees that you'll have to pay. He'll start preparing a document called the closing disclosures, which will have all the fees and the credits and everything, but it will be finalized because by this time he'll know exactly how much each of those individuals will charge, and he will know exactly how much credits you're getting back. In most cases, if you're working with a good experienced lender, the loan estimate will be higher than the closing disclosures. And that's not because the lender is not any good, but that's because they don't want you to be surprised with any expenses that you're not considering. One thing that I want to clear out when you choose your lender, I was told before that I'm going to choose this lender over the other lender because this lender gave me a lower estimate than the other one. This is not how you base your decision whether or not you're going to work with a specific lender. You base your decision if you're going to work with a lender or not based on two things: the interest rate they're giving you and the fees they are charging you. The estimates are just estimates. It's basically this lender estimating, for example, that the title company will charge you X amount, and the other lender estimating that the title company will charge you XY amount. The difference in the estimates doesn't mean that this lender is more expensive than the other one. It just means that their estimates are different, but they don't have anything or any input how much the title company will charge you, for example. So you only base your decision if you're going to work with a lender or not on how much they will charge you personally and the interest rates they're giving you. So when are those expenses due? A part of it will be due upfront and a part of it will be due at closing. So for example, earnest money deposit, inspection, and appraisal are due upfront, but the cash to close will be due at closing. That's it for today's video. If you still have any questions or if you want to buy, sell, or invest, please do not hesitate to call. Our clients' best interest is our #1 priority, and who you work with in this market makes a huge difference. So we would love to earn your business and help you out in all your real estate needs. Thank you so much and have a wonderful and blessed day.